All right. Well, good morning, everyone. I'm Jackie Forrester of Forresters Accounting and Bookkeeping Services. I've been doing this for about almost 40 years now. It kind of dates me, but it's all I've ever done is accounting and bookkeeping. And anyone who knows, I also have a love for pets. So I'm going to take it away now. So today I'm going to go over the 12 most common bookkeeping mistakes and how people can avoid them. So if you're worried about messing up your books, not to worry, we can always be there to help you no matter what stage or age your business is. We are happy to help. So here are some of the 12 most common mistakes that people could make if they're doing their own books. So we're just going to go over those one at a time. And so number one is guessing your way through it. So entrepreneurs tend to guess their way through bookkeeping when they're not fully sure of what they're doing. And the problem is guesswork compounds over time. Potentially it leaves a year's worth of books that you might need to fix at tax time, like we just had. And here are some of the examples. And number two, wasting more time than you need. So if your bookkeeping system isn't tailored for your business, you'll spend way more time doing books than you should. And thankfully, this situation is easily avoided. Setting up a customized chart of accounts from day one is key. So if you don't know how to do this yourself, ask an accountant, bookkeeper, or CPA. Number three, putting off until the guilt drives you crazy. So nobody actually likes doing bookkeeping, except us, of course. But if you wait until your shoebox is overflowing with receipts, your guilt forces you into a bookkeeping binge, and there's some serious consequences. You might struggle to remember what your receipts or transactions were actually for, let alone how you paid for them. Your bank reconciliation can be a nightmare, and you might forget tax documents or tax deductible expenses, meaning you probably won't maximize your small business tax deductions throughout the year. Number four, mixing business and personal spending. So say, for instance, you take a client out for lunch and you forgot your business credit card. Not to worry, you just pay for it with your personal debit card, right? So in the heat of the moment, it might seem easy to pay for the business expense with your personal funds, but in the long run, co-mingling your finances makes bookkeeping and taxes a bit of a maze, and it could remove a layer of legal protection in the event that your business is audited or sued. And to avoid this pitfall, just never get into the habit of commingling your funds. Number five, not reading your financial statements. Financial statements are a direct window to your business's financial performance. So if you don't read them regularly, or if you don't know how to read them at all, you're missing out on some of the big opportunities to generate revenue and avoid financial disasters. So the financial statements can help you stay in control of your cash flow. It'll help you create or stick to a budget. And this way it'll spot and maximize your deductions for taxes throughout the year. Number six, throwing away receipts. So if receipts get lost or if you just throw them in the trash, you really won't be able to back up your deductions that you made on your tax returns during an audit. So you may also be slugged into a fine. So a few things to note about keeping receipts. You can also keep digital records of your receipts. That's perfectly fine. And you might need to present those receipts in a business audit. So be safe and keep those receipts for several years. Number seven, hiring an inexperienced bookkeeper. So when it comes to hiring a bookkeeper, you might get what you pay for. So that bookkeeper that you found online or on Craigslist for about $8, well, that's probably what they're worth. So hire someone who has bookkeeping experience in your niche. So they'll have bookkeeping tips, they'll have tricks up their sleeves that are specific to your industry, and you'll be able to get your books done faster. Number eight, not hiring a CPA. So if you're serious about growing your business, you need to hire a CPA. A great CPA will know how to maximize your small business tax deductions, and specifically in your business field. They'll help you make year-end tax moves and explain your sales tax obligations. Number eight, recording expenses or recording payments to yourself as an expense. So here we're getting to the nitty-gritty. So this is where we see bookkeeping mistakes often. So sole proprietors and single member LLCs, when you pay yourself, don't categorize your payments as an expense. It's an easy mistake to make, but it will lower your overall profit and display a false total of income. And so instead, record these payments as owner equity, called owner's draw. Number 10, report transfers as income. So does your business receive money from multiple accounts like PayPal, Stripe, and other payment programs? So at some point, you'll probably have to transfer the money into your business checking. So when you do that, be aware that accounting software will generally record the transfers as income because it's the total cash in your checking account. So when this occurs, you'll need to log in, update or modify that entry, and record it as a transfer and not income. So income moving from one account to another is not recorded as income. It should be a transfer. Number 11, neglecting sales tax. So frankly, the tax office doesn't care if you know about sales tax obligations or not. They just care that you pay your sales tax that you owe, whether or not you've been collecting the sales tax from your customers or not. So our best advice is to get your CPA to determine and explain the sales tax responsibilities that you have from the start of your business. So if you haven't consulted with a CPA yet, it's never too late to schedule a check-in. Number 12, not classifying employees correctly. So is that worker you hired an independent contractor or an employee? If you get it wrong, you won't just mess up your books, you'll risk steep fines from the IRS, and Payroll Vault can probably tell you about that. So the IRS is hawkish about this rule because most or some business owners might knowingly misclass employees as contractors so they can skip out on taxes and paperwork. So as a business owner, you have a plethora of things on your plate, from devising a business plan to hiring employees, negotiating suppliers, and overseeing financial transactions, not to mention handling the budget or ensuring excellent customer service. So however, the most dreadful part of running your own business might be preparing and filing your annual tax returns and ongoing bookkeeping. So here's a list of our specialties and service offerings. As an added bonus, your overall cash flow will improve simply if you're most aware of where your money needs to go and spending less time sifting through messy finances. So how can you expect to be a successful business owner without accurate records? So when you have a clear idea of where you are, you have a clear idea of where you can go. So bookkeeping plants a foundation for near and year-end financial success. So you wouldn't launch a business without a business plan, so you shouldn't run a business without bookkeeping services. So thank you today, and happy Friday, happy Good Friday, and happy Easter, everyone.